Hi, everyone, and welcome to Bitcoin Analysis Beyond the Block for April 2024, brought to you by Ainslie Crypto. My name's Chris, and today we have our expert panel back to update us on where we are in the Bitcoin cycle with some analysis and discussion, looking at the macro fundamentals, market and on-chain technicals, and everything else in between. How are you going today, team?
Yeah, good. Thanks, Chris. Thanks for having us back again this month.
Yeah, going great. Really looking forward to crushing this today.
Excellent. Now, very excited to have you both back again. This framework and approach that we've been using seems to be going really well. We're getting lots of positive feedback. So that's great. And we'll continue along that similar path. Just a reminder to anyone who's probably for the first time watching or those who've watched before, the framework that we're going to use is look at that big picture first with a macro overview of what's going on in the macro economy. Then we zoom into the Bitcoin market specifically, and we follow that up with some Bitcoin technical analysis. So it sort of takes a big sort of top-down view of what's going on. And by the end of it, we hopefully have a really good idea of everything that's going on and how it all fits together. So let's start off with our macroeconomic analysis. As I said, that big picture view. And every month we tend to start off with this exact same chart. It is updated now for sort of the February data. So we call it the March chart because it's looking at the February data. Joe, you're all over this chart. You maybe want to start us off with a bit of overview of what's going on here and where we're at currently.
Yep. So if you've got the four different colors there, we've got mid-cycle, late, bust, and early cycle. So if you're thinking back to how these correlate to the markets during 2021, when we had a lot of liquidity in the cycle, and moving into late cycle, asset prices were going fairly well. As inflation took hold and the Fed decided to raise rates and liquidity was drawn from the system, we went through the late cycle and bust phase. Historically, the bust phase is the part of the phase where risk assets are most optimum to buy. And moving forward through the early and the mid cycle, where we are now, is where you get quite a fair bit of asset appreciation as well. So as you can see, we sort of flicked in between early and mid cycle for a little bit there, but now we're firmly in mid cycle.
So firmly in mid-cycle, but we're still below this. Like this line here is really just halfway, right? Like halfway in the middle. And even though we have pushed back up into mid-cycle, which makes sense with the economic data that we've been looking at, we still potentially have a long way to go in the cycle before we're worried about it rolling over again. I mean, it certainly can roll over at any time, with a shock to the system. But if it plays out as we would normally expect, we're still running pretty much to schedule, aren't we?
Yeah, that's right. And it's about having that long-term perspective as well, not trying to trade the daily and the weeklies. It's just knowing where we currently are and having a longer-term time horizon.
So that's looking sort of big picture out at the macro cycle generally. I know we brought this chart in last time, Isaac, that you like to talk about, which is the macro cycles, looking at them through a more specific framework that was used over crypto and Bitcoin in particular. Do you want to talk about this chart?
Yeah. So expanding on what I was talking about last time, I would like to talk about, seeing the summer and fall, specifically in the last cycles, there was a large variance. So you saw in the fall, that was where you saw majority of the appreciation. Now, coming into the 2020 cycle to 2021, you saw that majority of those gains were held within the summer, actually. So I think it tells you, obviously, both brackets, being summer and fall, are periods of expansion and growth, but trying to time them specifically, especially right now, we don't know where the top is going to be within that. So it could pull up the potential for a left translated, but we don't know yet. It's not conclusive yet at all. But there's definitely that sort of difference that we're seeing coming from those previous cycles to where we are now, and especially the last cycle we had, where we didn't see the majority of the gains in the fall, but rather the summer.
And that term left translated, maybe Joe, you might want to talk about this a little bit. We hear it a lot popping up as maybe this cycle's different. What does it mean for something to be left translated in when we're talking about cycles, firstly, and why are people so fixated on that for this cycle?
So historically, Bitcoin's has its right translated cycles, which means it follows that general pattern that we've got in front of us there. The left trend cycle would generally mean that we've got uh, a blow off top earlier within the cycle itself. So you would see.
If this is over 4 years, the left translated would imply, so a right translated cycle means the high comes in the second half or the right side of the 4 years. Is that correct?
Yeah. Yeah, that's
Right.
right.
So if
Generally
we're talking
speaking, yeah.
left translated, when you're saying a blow off top, you're suggesting that might, like they would be arguing it might come earlier this time.
Earlier within the summer cycle, and then autumn would basically be null and void for positive Bitcoin performance.
And Isaac,
I
does
think,
that sort of fit with what you were talking
yeah,
about?
I think it also, yeah, I think that exactly aligns. You'd be looking towards, if that did hypothetically happen, it'd be in the summer range. And towards the end of summer, you'd see that. And an extended bear market, which is typically what you'd expect from that left translated idea. I think there's potential for it to happen, depending on if it aligns with liquidity. We don't know yet, but obviously that's just a theory right now.
Yeah, right. So using this chart as that model, and I mean, I'm sitting on the fence on this. I still think that we probably end up seeing a traditional fall blow off top. But if we did see, what we would be on the lookout for is a real blow off top scenario happening in the summer. And then when you talked about an extended bear market, we'd be seeing that bear market through the fall and then obviously through the winter. So a longer sort of 2-year bear market than we used to, where all of these were very strictly a 1 year.
Yeah.
Yep. Okay.
Yep.
So that gives us a bit of a framework there. Now, we like to go and look at whatever we can in terms of other metrics to help us get an indication of where we are in the bigger picture in the economy. And one that's particularly relevant when we talk about what to expect for Bitcoin is the ISM, which is the US. And now the US, I make this point all the time, the US is not the world. We acknowledge that, but it's a big part of the global economy, with particularly because of the reserve currency status of the US dollar. So if you think about this chart showing what's happening in the US, it is pretty relevant. We've got growth. We predicted this pretty accurately, I think, last time. Joe, do you want to talk about what we saw in the ISM and what the latest numbers have shown us?
Yeah, so like as you pointed out, this is just the US, but the US is a fairly strong economy driver for the world. As predicted last month, we did expect it to go into positive territory, which would be over 50, meaning expansion after a extremely long period in contraction. Usually those contraction periods are short and sharp, and most of the time is generally spent in expansion as well. So with that expansion phase starting now, that actually really aligns with that previous chart that we had up, where we're moving into the macro summer/mid cycle, where we can expect growth to continue on for quite some time going forward.
And when you say it's broken up, I mean it's just popped its head over that 50 line, which is there, like it's right on that line. But we've been waiting for this for a long time. This is zooming out, looking, well, not so much zooming out, but looking at the 3-month leading indicator that we have as well, that tends to look further out into the future. So it just popped its head above, but you would be expecting to see that continue?
Yeah. Like I said, most of the time is spent in expansion and usually very limited time in contraction. So I would expect up from here. We'd continue expansion for quite some time going forward.
Okay, so very consistent with that bigger model that we were looking at, or those bigger models from the start that sort of showed the macro economy in a chart sort of format, whether it was crypto or generally. We're going to focus on global liquidity because it's the area that is really our bread and butter. We like to focus on it quite extensively because of this chart, and I've talked about this last time. I'll talk about it again. What it's really showing is that global liquidity has a very strong correlation to world financial asset prices that goes back for a very long time. So we can prove that. And that's what these tests do. But what that does for us is gives us a tool that we can use to say, well, we've got something that gives us a foundation to know what to expect next, at least. And that's what we've been hanging a lot of our analysis on. This chart, which we've only had for the last couple of months of really narrowing in on the weekly level, has seen a kick up here. Maybe Isaac, you've been looking at this as well. Do you think that this kick up here was a bit of a surprise, or like, is that what you're expecting? How do you interpret this latest?
I think looking at especially things like the ISM and all these different things showing expansion, it relates to liquidity and more liquidity coming into the market's starting to heat up again. And I think obviously we've bottomed out with the liquidity going to the index, which we'll look at later on. But that's what you'd be expecting going forward, is we're going to be seeing, there's going to be times where it goes down, it goes up, but the majority trend is going to be going upwards in that direction. Yeah. So I guess it's expected, 100%.
And Joe, how did you take this? Because I saw like it was a big number.
Yeah, so I think around $900 billion in terms of global liquidity expansion. We were predicting last month, potentially it could even track sideways for a little bit just based on seasonality and whatnot. But yeah, definitely surprised to see that kicking up. And we know the long-term trend is up and to the right regardless. So it's just the little bumps along the way, which we don't get too tied up about.
No, and I think that's a really good point because sort of to Isaac's point of, we are expecting all of this to continue, and you said the same thing, Joe, longer term. It can be, I'm expecting a little bit of choppiness over the next couple of months, really, over quarter two. And this probably is an indication choppiness occurs in both directions. So, you can get surprises the upside, and then it wouldn't surprise me at all to see next month a drop in that. So the long term, we know where it's going, but in the short term, it can be a little bit confusing. I know when we're sort of zooming out, looking long term, again, this chart is a favorite as well. Talking about the different impact of liquidity against inflation and really breaking that inflation down into the two components. Joe, do you want to talk about that a little bit?
Yeah, so just quickly, we've got that black line, which is global liquidity, and it's been measured out to 2025, so it's a little bit of a leading indicator. Historically, that's gold and crypto have had a very tight correlation to liquidity. Sometimes it dips under, sometimes it dips above. You could argue that those dips under are buying opportunities, and when it starts to really stretch itself above, which we may actually end up seeing in the next 12 to 18 months, they would be times that you'd be looking to sell. So remembering that this is gold and effectively Bitcoin, whereas we've really only had Bitcoin up until 2010 or 2011 when we actually had a trading price for it. So there's a very fair chance that yellow line really gets away from that black line, which would be, extraordinary gains considering that black line is going up and to the right and increasingly steeper rate.
And Isaac, where we saw that happen with gold, a while ago now, back in, where does it sort of start? Sort of 2009 through to 2011, that sort of period where we had that runoff. Would that correlate with what you're talking about in terms of a potential left translated cycle where the market just gets really overheated?
Yeah, 100%. I think that could definitely happen, especially looking at the chart with Bitcoin too and where we are now. It's very potential, but still, again, I wouldn't iterate that I think it is a little bit early to be, sort of holding a firm stance on that left translated idea.
Yeah.
But yeah, definitely.
So it's something that we're looking out for. Personally, I agree with you. I don't think we're going to end up in that left translated cycle, but I don't have a whole lot to base that on other than expectation of the global liquidity cycle being the bigger driver, which is going to operate over that longer time frame. But certainly we have to be on the lookout for it because expectation can lead, just the fact that people are talking about it can lead to it happening.
Yeah.
So it's
100%.
important. We look at the global liquidity index. You talked about that before, Isaac. Do you want to just briefly mention on this chart what you were thinking?
Yeah. So I've explained this one in plenty of the other videos we've done before, but briefly, we just have a sine wave overlaid on the global liquidity, which is an index scale. We've got 0 to 100, 100 signaling we are at those peaks in liquidity. There's a lot of liquidity in the market, generally when risk on assets top out at that point. A point I wanted to add that I find very interesting is that, ever since around 2018 time period, the moves have been much more exaggerated and then much more timely in order with the sine wave there. So I'm not too sure exactly why that is the case, but it would be great going forward if it maintains this because it makes our job a lot more predictable. But hopefully it does. But so far tracking, it looks to be quite the same. But I'm not too sure exactly why. It could be the debt burdens are increasing more. So liquidity, it's like everything gets exaggerated. But that's just my theory. I'm just curious to know what do you guys think about that?
Yeah, so it's more related to the actual debt cycle, the debt cycle being 4 to 5 years. I think that there's from data that I've seen and heard, it's usually about $70 trillion needs refinancing every year, based on a 350 trillion global debt amount. So basically, all that's happening there is the debt gets refinanced and brings liquidity back into the system, and that just forms like basically effectively a cycle, a 4 to 5 year cycle, which coincides with Bitcoin's cycle as well, which we've been picking up on the
And
last couple of
especially
years.
as those debt burdens are rising too, and it could further, push these exaggerated moves, which is great for risk on assets during those run-ups.
Yeah, 100%. So obviously more and more liquidity needs to be injected in the system to refinance these debts as they grow larger, which, the more, like as we saw in the previous chart, the more liquidity in the system, the more asset prices rise, which is why it's important to own those assets as well.
And I think it's important to note as well that we're at a record high in liquidity in nominal terms. So just in how many dollars of global liquidity there are right now, yet we're not even at the 50 halfway point in the index yet. So the index is smoothing all this out, taking into consideration lots of other factors to come up with where we are. And it's effectively the index itself is saying that we're not overextended in that liquidity yet, even though we're hitting new highs in dollar terms. So there really is a lot of potential still left in this cycle if it's going to reflect anything close to what we've seen historically.
That's right. And it doesn't even really need to get to 90. Even if we got to 70 or 80, we're going to have a bang another 12 months in terms of asset prices. So
absolutely. We show this chart as well, which is the same thing. It just lists all the countries down here on the left, and you can see green indicating that they're injecting liquidity, red indicating that they're extracting liquidity. And when you sort of look across this, you can see it's unfolded over a long period of time, but we had heavy green back when we were coming out of COVID. We had all those injections. Then we had a lot of liquidity being drawn out of the system with raising rates. And then we're coming out of that now. You can see on this last set of bars, everything's at least getting a lighter. Even the reds are much lighter than they were. So we're heading back into that strong liquidity picture once more. So then we take that and we apply it specifically. So this line is the liquidity index, and in the background we've got the price of Bitcoin. This chart's really just highlighting where the cycle lows were, which lined up perfectly with the liquidity cycle lows, and then the highs lined up quite nicely with the highs as well, even though there was a bit of lag. If we zoom in, this is the chart we really like to focus on, which is that it's a little bit confusing when you first look at it, because you go, well, the price is much higher than 50,000. That price there is what the average price was during March. And the reason we're using March, even though we're in April, is because that's the latest data that we have in the liquidity index. Now, I'm really interested in your opinion on this, Joe. We saw the pullback in global liquidity a little bit. Like, again, it's not a straight line, but we know the direction of travel. Yet Bitcoin has taken off. And since then, when we update this chart next month, it'll be off this chart. Like, we've broken all-time highs, we'll be way up here. So what does that tell us? How did you interpret that? Because that seems to be disregarding what we're seeing in liquidity.
yeah, so I think potentially next month we will see that start to tick up again. If and you can assume that the Bitcoin market is forward-looking. We're currently going through a bit of a sideways action, testing all-time highs again today as we speak, which is why we thought we might have a rocky period there for a little while. But, if you're looking at a lot of sort of fundamental analysis in terms of which we'll get onto later, the ETF inflows and the amount of Bitcoin that are actually being taken up by those institutions, I think that fairly well aligns with the price action we've seen over the last couple of months since they launched. So if you think back to even when the ETFs launched, we dipped back down to 38,000. We're still in a reasonably rising liquidity environment, but that doesn't mean that we can't dip down. And that institutional demand drove us all the way from 38 up to 74 within the matter of a few months. So I think, currently where we are, even though we might get a little bit more of a uptick in liquidity next month, it doesn't mean that Bitcoin can't just sit there and have a bit of a rest for a while.
Isaac, any thoughts that you've got on sort of wrapping up this component of it, the macro side, when we're starting to look at Bitcoin?
Yeah, I want to talk more about the green section on the top there, the previous cycle.
Yeah.
Just a lot of people will probably think, the liquidity topped out way before Bitcoin had its giant rise, but it's a large range, right? It's a large time scale. So that wasn't green for quite a while. And as Bitcoin's rising, we're also using multiple other metrics too, not solely just global liquidity, but it's definitely the foundation of the principle, which what we're using to going forward to form our thesis. But just because it topped out early doesn't doesn't discredit it at all. And in fact, it had a huge rise up since the low anyway. But obviously, if you're talking about the exact top, yeah, well, sure, you missed out on a fair few percentage points there. But, it was still in the green section when it topped out. It's still following the main idea 100%.
Absolutely. And I always like to highlight too, this was a very unusual period of time. That was the end of the pandemic, where the government stimulus was out. People had been locked up for a long period of time. A very unusual period of time. So we may not see it necessarily play out like that. I would actually be expecting this time to be much more closely aligned with what the liquidity cycle's doing, and not necessarily peak out afterwards. So that's just something to have in the back of the mind as well. It was very different to what we would usually expect. All right, so we've done the big picture macro. Now we start getting into the specifics of the Bitcoin market analysis. I know you brought some charts along that you would like to keep us updated with, Isaac. So we'll start you off on this one, your Bitcoin market to realize value chart. Can you give us that overview again of what it is? Because it takes me a few times on these charts to understand what I'm looking at. So step us through it, and then we'll discuss.
Okay, so essentially what we're looking at here is the market price, which is the black line, and the realized price, which is the blue line. They're measuring it in market cap on the left-hand side, but it's essentially using the realized price to measure that. Okay, so what you're getting out of this is you're getting a deviation score. Now, this is known as the MVRVZ score. Now, that is that orange line on the bottom there. Now, currently where we're sitting at around the 3 to 2.5 range. Not suggesting at all we're overextended. Looking at previous cycles, we reached scores of 10, 8, and the last one being around that 7 range. So what that basically means is the market price is far more than the realized price. Now, the realized price is essentially the average cost basis of all the Bitcoin in the system that's been transacted. So it's, I guess you could view as the average hold if you can conglomerate everything together. So when that gets overextended, it generally means that a lot of people are in profit as a whole. And that's when you start to look for taking profits, especially as they reach those euphoric levels. Whether we reach a euphoric level or not, that's what typically happens when you reach, overextension. Now, if you look in the lows here too, you can see when the market price goes below the realized price, that's when you're getting a deviation score of 0 or even negative. But we typically don't go much more than 0. We're much within that band, which is the green line there. Signaling a very good time to buy. You can track it going back there. Every single time it's been in that region, it's been a stellar moment to buy. And when you overextend further, with the market tops, that's been the right time to sell. So another point I'd like to add is we've also been decreasing recently. So if you can look, the last cycle was lower than the previous cycle in the deviation score. This is potentially because as the asset evolves and it develops more people are in the system, there's just less volatility as we go forward. So we could definitely be seeing that for this cycle. And I've spoken about this before for potential targets. I'm not looking for a deviation score of 10, in my opinion. Obviously, crypto can do anything, Bitcoin can do anything. But I think a more well-rounded viewpoint would be around the 5 to 6 range. I think was more achievable and much more in line. But obviously, we're going over other metrics at that point in time. But yeah, that's essentially what this chart's telling you.
So, Joe, I know we've looked at this, and certainly Isaac's a point there that we've seen the high and then a lower high and then a lower high, and a lot of people in the market agree with that. That, I mean, not that we're saying this is the high here, but the lower high you would assume would be up here somewhere, like Isaac said, that 5 to 6 range. Could this time be different though? Because there's almost a sense that it's time to get out if this goes a bit higher, because that's what we're expecting, the market stabilizing. Could it be different? How do you look at that?
Like, I don't disagree. I see what Isaac's saying, and that completely makes sense. Like, law of diminishing returns, as an asset becomes more liquid. Becomes more liquid over time. This is one chart in our toolbox. That's what I'll say. So when you think about Bitcoin going through its S-curve adoption moment, I believe there's potential for that MRV score to really surpass what most people think it's going to end up doing. So a lot of people would be predicting that 5.5 to 6, which makes sense historically if you draw a line through there. But if we're talking about institutional adoption, ETF adoption, I believe there's a chance that we blow through that, and we don't want to be. That's why we watch liquidity closely as well. We don't want to be selling out too early.
It's a good point, because if it did surprise and did another, massive outperform, that's where you're going to see a big move. That means if people had sold out earlier, they will be chasing and won't be able to get back in, and could potentially stuff themselves quite badly by getting in at the top after they're chasing, going, oh, okay, now I acknowledge that this time is different. I mean, this is very much a this time is different moment if that happens. And that's where people can do the most damage to their portfolio, if they come to that realization too late and then jump back in again after they've gotten out, then hold it through, and then it eventually does revert. Isaac, do you have any more on that?
Yeah, I completely agree with that point. Another point I'd like to add is we're also starting to see that tick up in the realized price. So since we started ranging, once we break the all-time high, we can see that blue line starting to increase. But even before then, you can just start to see it increase subtly there too, right? So that's just essentially raising that cost basis as an average. What it does lower the MV score. So it sets us at a higher level for potential to go up higher. It's sort of like what happened in the 2020. You can see down there, even though we had that crash there, it was slightly rising, but nothing crazy. But if you start trading at a higher range, it starts to realize that cost basis. Therefore, you have to go up higher to get a bigger deviation score, if that makes sense.
Yeah, and it may be possible that we could still have that extended run, but it might just have the pullbacks along the way that pull the score back down too. And so there's lots of variables that could come into play, but it's certainly one that we can keep an eye on. I just want to flip over to this next one. Similar concept, but different chart. Do you want to step us through this one, Isaac?
Yeah, it's very similar. So this is just the net unrealized profit and loss. It's a Newport chart. They measure it in a sort of category scale here. You've got like euphoria, belief, optimism, hope, capitulation. It's very similar metrics looking at realized price. And as you can see here, we had the very similar stuff, capitulation phase when a lot of holders were actually in losses. So they're net unrealized losses. And then going into where we are now in the belief phase, according to this chart, right? It's just one chart in our toolbox. But I'd like to say we can range in this sort of category for a long time. It doesn't, just because we're in it is not a top signal at all. Now, if you look in the previous cycle, the blue line, which is the one we're looking at specifically, is we reached that level. Bitcoin was probably trading around, I don't know what it was there, probably like 9K when we entered the blue level right there. And since then, we spent a large chunk of time in there, and we had most of the asset growth within that time period there too.
Yep.
Another point is it doesn't have to exactly reach euphoria. As you can see, last time it just tapped it, I believe. But that's just a little side note. But it could be very much different this time.
Yeah, right. All right, and the last one in this particular set of charts, you've got your combination, which pulls it all together. Do you want to quickly whip us through that one?
Yeah, so the combination chart is just a conglomeration of all these different metrics. You've got the pi cycle indicator, you've also got MVRV, and you've got a few others there, moving averages and so on. They just sort of aggregate it all together and give you a score. So right now we're sitting around 80 the last time I checked. Typically when the top comes, you're looking at a score of 95 to 99. I know the last top was around 99 to 98 as it gets really red and overheated. So right now we're overheated in a way, but definitely doesn't feel like the top's in terms of sentiment, global liquidity, and all those other metrics. So just going solely off this, in my opinion, you wouldn't want to be selling right now. It's not, because even though we are quite extended, we can definitely stay within this region for a long time.
Yep. And that's a very consistent message we've had over the last few months. So now we're just going to look at 3 more charts in this section around sentiment analysis. This one you've changed slightly from what we looked at last time to add some additional commentary around. Do you want to just talk us through this commentary?
Yeah, so I guess I'll just start with those small red and green boxes on the left side. So a lot of them are it's very choppy, right? So a lot of them are false signals, false bottoms, false tops. So especially you can't be going off this indicator purely looking at it. Oh, I'm in extreme fear. This is the time. I'm in extreme greed. This is the time to get out. More so, it's that biasing tool for the more macro side. So when you're at those lows, you potentially be looking to buy. When you're at those tops, you potentially looking to sell. But even you saw there was a false top on the left hand side. Yeah, right there. So you can't be using it solely, right? You have to be looking at other metrics. But especially another point I'd like to add is going into the big run up there. You can see extended greed. I've termed it as the first top. I'm using the first top because I know we've spoken about before. The second top was it was a bit of a strange one. You know, you had the stimulus from that COVID time, potentially a different setup. It was just that's why I'm focusing more on this top here. And as you can see here, as price was going up, your fear and greed index was going down, which is the sentiment score. So that potentially is signaling that smart investors are starting to scale out there as we go down in the sentiment score. Something to be looking at, I think, and the same thing for the bottom there too. You saw making lower lows and higher highs in the sentiment score. So something to look out for the top. And as we can see there, you're in that range for quite a long time. So we could be in there for like, a year and a half. But as of where we are right now, nothing's signaling we are entering that zone yet of, smart money starting to scale out there.
And your next measure of sentiment, this is interesting because we were talking about this just before, and you were saying how, this is only a couple of days old, but it's changed so much already. Do you want to just talk us through what's going on in this chart, and particularly you've highlighted these lows here?
So this is more like the short term. So it's measuring crypto Twitter, Reddit, Bitcoin Talk, which are forums and stuff. So this one, I wouldn't be looking at this as a macro indicator. This is just if you're looking to trade per se and looking where price could potentially be going in the short term timeframes. I've highlighted that as a red circle for those two regions there, because on the index, which is the orange line, which is the sentiment index here, it's not really labeled well, but you get the point. There's a score on the left-hand side. And at the moment, I think at that point in time, it was sitting around 1.5-ish. No, point. Oh, yeah, in a scale, it's 1.5 if you make it as a percentage, right? Or 10.5. It depends how you view the metric. But as you can see there, at that low point over there, that was the bottom for the local rise to the top. So it's just looking at what's the sentiment doing on that sort of short-term time frame. Obviously, what the Buffett quote, buy when others are fearful, that can be even shifted onto the small time frames, as you can see here, and it's played out quite well. And where we are now, we saw that rise up to this chart's like 2 days old, and we're now at like 72,000. So
it moved quite quickly. Joe, what's your general sense? Because I always like to ask you this, just because I know you're across a lot of reading in that space, looking at what's going on crypto Twitter in particular, or crypto X. What's your feel?
Yeah, that chart's making a lot of sense to me, particularly what Isaac's saying with that kick up towards 72 or 71,000 again last night. I would say the sentiment's somewhat neutral, maybe a little bit more bullish from what I'm seeing. Which is to be expected. But we are going through an extremely choppy period here with a lot of volume. So I expect the sentiment to swing quite violently until we either get a large breakout or breakdown.
Yeah, and I'd just like to add, where we are now, the sentiment score is a lot higher. It's just that this chart is 2 days old. And this
shows how
sentiment
quickly
score,
it moved.
yeah, this one moves very fast because it's people's emotions on those social media apps, and people flick really quick. As soon as they see a red candle, they'll start to freak out, or if it's going up, they'll be like, oh, it's going great. And that's why that one flicks a lot faster than the more macro fear and greed, which is the one we just looked at before.
Sure. And we like to wrap up the sentiment part, looking at the Google trends seem to be pointing down here.
Yeah, I feel like that's interesting. Potentially even good. Like even that we're maintaining these highs while we're starting to decrease in interest. But if we start to rise up again, you're just going to start to see that pile up again. And the fact that we're starting to decline on the Google trends, but price is relatively strong actually. In my opinion, that's quite a bullish indicator.
Absolutely. And
I think
we have to point that out regularly, that often, we look at these as contrarian indicators, that you don't necessarily want to be right up at the pointy bit. That's more of an indication of the end of the rally rather than the beginning or a healthy rally. You do want to see some interest, that it has been trending upwards, but you don't necessarily want to see sky high interest, because that's where it gets into real bubble territory. Joe, did you have something to add?
Yeah, I'd just say that chart really just explains the mentality of people that trade generally or just invest in crypto. So when the price is going up there, everyone's watching the YouTube videos, everyone's Googling it. and they want all the price action to happen at once. Whereas once it turns down, the sentiment can quickly dissolve, and you get those sentiment trends falling off very quickly.
Absolutely. This monthly Bitcoin analysis is brought to you by the Ainslie Group, Australia's trusted choice to buy, sell, and swap gold, silver, platinum, and crypto online or in our Brisbane and Melbourne showrooms. With over 50 years of operation, we're your reliable partner in wealth management. If you're looking to buy tokenized gold or silver anywhere in the world, check out the Gold and Silver Standard for the security of real-world precious metals combined with the flexibility of blockchain. Okay, taking a slightly different look, but still in that market analysis side of Bitcoin. Joe, you've been looking very closely at the ETFs, and you've been giving us the ETF analysis each month. What's been going on this last month?
So last time we spoke, we actually had pretty much every day that week we had net outflows, which we assume was like those Genesis liquidations, like debt repayments being made to asset holders who were going through the bankruptcy. So as we can see that all comes out of GBTC, which is the largest holding and still is the largest holder of Bitcoin. So you've got your green line there, which is IBIT, BlackRock, and they're slowly starting to catch up to GBTC as the selling from GBT starts to slow as well. So as we flick through the charts, there'll be some better bar graphs to display those. But in the next chart, you'll see how the flows. These are flows in terms of Bitcoin. So when you see negative 2.2 thousand, that's negative outflow of 2.2 thousand Bitcoin, which is the week that I think we last. Which is the week that we last had this chat. So we'll experience a lot of outflows, and we did predict that going forward, once those sales from GBTC had slowed, we'd expect to see positive inflows for the ETF industry, and that's exactly what's happened. Apart from that one day of 1.2 outflow, so it's still heading in the right direction. And back to that, what we were talking about earlier with the MRVR score, like in terms of the S curve adoption cycle, like we're potentially going through a little bit of a lull period at the moment with the price ranging, but as soon as that price breaks out, I think we're going to see an upward thrust in price as money starts to flow in again and money chases Bitcoin.
I really find this quite fascinating that we only see such short periods of outflows and then business as usual with the money still flowing in. The market really hasn't been shaken at all by any of this, has it?
Not really, and a lot of commentary on crypto Twitter in particular was that some of these ETF flows would not be sticky, and the first sign of a drawdown, the money would leave ETFs. So we've had, I think about 16% correction from the high down to about I think when we hit about 60,000, from 74 to 60,000, and we've seen the inflows starting to pick up again. So once again, remember these inflows are net forced GBT selling. So I think it's heading in the right direction, and I think it's going to continue for quite a while.
And you also bring this chart just looking at, and we've seen this evolve over the time, and it's really quite fascinating to watch it evolve. What's your main takeaway here?
So I suppose GBTC obviously has nearly half the amount of Bitcoin that it has when it originally launched just a couple of months ago. So that gives you an idea of the amount of Bitcoin that has been flowing out of GBTC. But then you've got IBIT to the left there, which is BlackRock. The amount of BTC that they're actually accumulating, they're nearly surpassing GBTC in that extremely short amount of time. Also got Fidelity there, which are doing with FBTC, which are doing a fantastic job as well. They're only a little bit behind IBIT, but when you combine Fidelity and IBIT, just those two themselves, they've already surpassed GBTC.
They're all moving in the right direction. I mean, I know we talked about MicroStrategy having a big slice of the pie not that long ago, and how that was potentially not a great thing in some respects, because you'd rather have it more diversified. But over the long term, if this trend continues, they're going to play just a great role of still being a major player, but certainly not the largest player by any stretch of the imagination.
Yeah, and arguably the money coming out of GBTC is, over the last couple of months, is going to be a net positive in the long run anyway.
Yeah,
because a lot of people were just trading that arbitrage because due to the discount. They were just getting in because GBTC was a trust. It was the share price was trading under the value of Bitcoin. So as that Bitcoin became liquid when it converted into an ETF, that's where we're getting a lot of the selling from as well.
Makes a lot of sense. All right. Well, we've done the big picture, macro. We've looked at the market for Bitcoin sort of through all those different measures that we use. Now it's time to dig in to the technical analysis. As we always say around this, the technical analysis is really the fine tuning. It's the giving a little bit of timing flavor to the bigger picture trends that we've identified. Isaac, you've bought us, first of all, this Bitcoin cycles chart, which is a new one that you've bought this time. I really like this. Can you step us through what's going on this chart?
Yeah. So I'll start with the halvings, right? So the halvings are those orange dotted lines there you can see, each one going forward. The next one's coming into around the 20th of April, so relatively soon. Historically, these have been very pivotal points where prices either shot up or it's sort of consolidated for a bit. But nonetheless, it's before that point where the price starts to accelerate at a very high speed, which is that summer and fall phase going back to those previous charts that we're looking at. So where we are right now, we're going to be entering that soon. So we could definitely be up for some crazy price action soon or some consolidation. This is on a monthly chart. So yeah, obviously it's not going to happen straight away, but it can happen very quickly when it does happen, as crypto tends to do that. So as you can see there, those profit start and profit end are just timing metrics. So typically after that amount of time, that's a good time to start scaling out if we're following the traditional 4-year cycle. But if we start to follow this left translated, as we've been speaking about before, we'd have to adjust that and sort of create a different framework going forward. But based on what we've been looking at and liquidity right now, we're tracking for a 4-year, in my opinion. So I think we can leave that as a standard setup right now, looking to starting to take yeah, so even you can see there the DCA points, which with this indicator uses a lot of different metrics, gives you, it's been quite a good accurate indicator looking at the past history there too. But yeah, this is just one metric, one tool in the box. But yeah, like I said, the green phase isn't anywhere near yet. So we have a lot of good things to look forward to coming forward.
Joe, looking at this, I would, if I was to extrapolate where I think that green box ends up, it's right in the 2025 to 2026 sort of area that we've been anticipating. It could line up perfectly with global. In fact, it might be slightly earlier than where we would think, but we would be anticipating that late 25 into 26 is where the global liquidity cycle would top out, I think. Wouldn't you agree?
Yeah, I agree with that. It's somewhat concerning that everything that we look at is telling us that that's exactly when it's going to be. So either all our metrics are wrong or they're completely right. So yeah, and that's why I expect this year throughout the rest of this year, based on all our macro and technical and fundamental analysis, to be another fantastic year for Bitcoin and potentially well into 2025. Also, just on that halving, just for those who aren't familiar with it, at the moment, leading into the halving around the 20th, there's 900 Bitcoin produced a day by the miners as a block reward, and those Bitcoin generally get sold to pay for the expenses for the miners. So as of the halving, they'll drop to 450 Bitcoin produced a day, which is a obviously less supply on the market with even maintained demand. Is generally would be you'd expect the price increase from that. So,
and we have seen lots of people misinterpret. We certainly hear stories of people misinterpreting what the halving means, where they're going, oh, they're going to cut the supply in half, or that people are like, it's not cutting anyone's Bitcoin in half. It's cutting the amount of new issuance of Bitcoin in half. And there's lots of confusion around that. Some people saying, I won't buy Bitcoin because every 4 years it halves, or your value halves, or your amount halves. Like, there's lots of confusion, but yeah, I'm sure anyone watching this understands that's not the case, but there is a lot of confusion out there.
Just goes to show how early we really are.
It does show how early we really are in that context, for sure. Moving through your support and resistance, I know, Isaac, you like to look at these. You give us the weekly and then the daily, and you always sort of bring us with that warning that you're just identifying levels in the market. It's not necessarily predicting anything. It's being fairly accurate in the past few times we've looked at it. Is it still being accurate now?
Yeah, so last episode we were talking about how we're expecting either consolidation or more downside. Now, the consolidation is what we've seen so far, and that's expected too, just based on a time frame component. That going into the halving, it tends to consolidate, right? So that wasn't purely just levels and so on, but yeah, price action was suggesting that we had that full last video we did. So there's a fair bit to recover, and we've recovered like a lot of it right now already. But yeah, like where we are now, during that consolidation phase right now. So I've got that orange line there, which is the all-time high. We're sort of straddling just right near it, like or on it exactly. So still treating it as a resistance level to be looking at. But yeah, this is a very interesting time going into the halving. I feel like TA is not necessarily the best tool right now in the because it's a very volatile time in the market, and anything can really happen at this point. Within reason, obviously, right? But as you can see there, if let's just say we do drop, this is the weekly chart, so we're going to go on the daily later. But if we have a significant fall, I have the weekly, which is 51,000 there, as you can see around that point, which is also a volume level too. I personally don't think we're going to be going that low, but my opinion can change next month, depending on where we are, right? Based off the indicators and the metrics we're looking at. But as of right now, it's looking relatively strong. For the fact that momentum is actually starting to roll over, yet price has actually maintained its nominal value. So, yeah, in my opinion, that's shown some strength.
So when we zoom in onto that on the daily, and again, I know we start to get into wild prediction and speculation when we get too close on these, but the halving, there can be a lot of anticipation, the build up to the halving. My feeling is that this time around, people aren't focusing on it as much as they necessarily have been in the past. That there's other factors. They're probably more focused on ETFs and things like that than the halving itself. So I know sometimes after the halving, you can actually get a dip where it's like the sell the news, where you go, well, we all the anticipation of it coming, then it finally happens. Nothing really actually changes in the market. It's a longer term process than that, and the price actually drops because people are a bit disappointed that just didn't take off straight away. Is it different this time? Do you see that the sentiment really is there, that people are really enthusiastic about the halving? How are you interpreting that?
I mean, just based off my crypto Twitter and all the things I'm looking at, I feel like, yeah, as you said, I feel like there's less emphasis on the halving as we're going forward. People have already kind of worn over that before in the last cycles. But yeah, we could definitely see a situation like the ETF where people were expecting it to just, as soon as the ETF came out, rocket up to $1 million, and then they didn't see that. So they're like, oh, I'm going to sell now. And we did see that reduction in price, and then price started to pick up again, right? And then they start to FOMO in, as it usually works out. So we could definitely see that situation where we start to, have a drawdown if we don't, because people are expecting this, halving comes, so it charges up. But people that maybe that might not happen, right? So people will start to sell off, and then we start to see that reduction in price. So again, like I said, this is really more sentiment, this sort of range here. It's like, what does the market feel like? And TA and sentiment at a large scale, I thought the sentiment sort of outweighing at a much larger scale here. But we can definitely be looking at these levels I've drawn here. We had that triangle, which we've actually broken out of now, since this chart's 2 days old when I made it. The momentum indicator was pointing towards upwards, and then the RSI, the standard RSI, was just sort of was just in equilibrium zone, as you'd expect for that type of triangle, right? And we obviously broke to the upside at that point right now, but we haven't broken the high yet. So everything's still undecided right now. And the TA is it's hard to know what's going to happen right now. So, yeah.
Yeah, so a lot lining up with what we were discussing about even the volatility that we're expecting in global liquidity. It's all lining up with this, April, May, possibly even into June being turbulent times. Your last metric here is one that you've sort of focused on, particularly when there's divergence. Is that what we're seeing at the moment?
Yeah, we are seeing a divergence. I will quickly go to the point where we were last time we made the video. We were actually decreasing. And remember, I was talking about how I was noticing a healthy correction because we saw CVD going down, open interest decreasing whilst price was decreasing. We've actually since then had a change in the structure. Price has been making higher highs, open interest has been making higher highs, whilst the CVD line has been making lower lows, suggesting that we're potentially seeing people buy it up. So larger whales or whatever category you want to put it under, absorbing the short sellers there. So if I had to pick a stance of where I would be, I would be leaning more bullish. But again, I want to go back to that point where there's a lot of sentiment is on the line right now, and it's really going to be depending on how people feel once we have that halving. And this can be wiped out very easily. But if I were to pick a bias from a technical perspective, I would be picking higher. And since then, since I made this chart, we have actually increased to 72,000. But at a divergence at this scale, you'd probably be expecting a bit more. But again, where we are in price, it's quite choppy. It's very hard to sort of know what's going to happen here right now.
Okay, well, that brings us to the end of all the charts that we have. We've covered quite a bit. It's been obviously very busy month in terms of lots of things happening and in the lead up to the halving and just generally around global liquidity and lots of stuff going on in the world generally. I'll probably pass to each of you just to get any sort of closing thoughts, final thoughts of where you think we are, and expectations for where you think we are for the month ahead. And maybe Joe, we'll start with you.
Yeah, so I'll sort of just pretty much touch on what I said last month. We may go through that. Well, we are going through that period of choppy sideways action with global liquidity potentially stagnating for a little bit in the next month or two. I would just say continue to take that long-term time horizon for the rest of the year and then well into next year, and don't get too worried about the dips. I personally see the dips as buying opportunities, as I see Bitcoin a lot higher over the next 12 to 18 months.
Thanks, Joe. Isaac?
Yeah, I hold the same sort of belief there. Last time we were talking about how we're expecting consolidation. We're seeing that right now, and this can play out for multiple months. So nonetheless, we have that long-term bias. Global liquidity is tracking upwards on a long-term time frame. So we know what we're expecting in the future from that macro perspective. Short term, potentially, in my opinion, we could see price, break up. We've already seen that since I've posted that CVD chart. But more so focused on the long term as usual, right? That's where the majority of the money's made. So yeah, we're holding that long-term bias, and that's where I'm sitting right now.
Great, thank you. And I think my 2 cents on the end of that would be, I've heard recently that the bulk of the gains are made in the first part of the cycle. This is when you're talking traditional assets, and we're sort of well into that now. So potentially 2/3 of the gains, if you're looking at things like the stock market generally, have already been made. They're still not suggesting we're at the end of the cycle, but you really make those big gains early in the cycle. We've certainly made big gains early in the Bitcoin cycle, but we have to remember with Bitcoin that it trends a little bit differently if it follows what it has done in the past, where we do, as you said right back at the start, Isaac, when you were talking about those seasons, we get those really big blow-off moves happening later in the cycle than what we see in traditional assets. So it really can be very costly to miss out on those big moves and get out too early. I think we've got consensus across all of us here that now is too early to be thinking that we're at the end of the cycle. So we'll certainly be watching that every month as we do, and with all of those indicators, trying to get a feel for when we are at that end. But without some external major shock, we're not at that point yet. So certainly, hodl onto those bags. You stay in the market for this period is the best advice we can offer on the basis of the tools that we're looking at. So that's my wrap up, which I think aligns with what both of you have said today as well. So thank you very much for your efforts on that today, Joe and Isaac.
Yeah, we're great. I think this worked really well, and the framework is great.
Yeah, I'm thoroughly enjoying it every month. Hopefully everyone else is who's watching as well. Thanks everyone for watching. We'll chat again soon.